children. Today let us learn about the second chapter in accountancy +2 course, that is accounts of the not-for-profit organizations. Business main aim is to earn profit, but there are few organizations which are offering services to the members and people at large. Such type of organizations offer entertainment, providing health to the members and public, those who take their services. Such type of organizations, they are to be accounted, and the survival of the institutions are monitored by preparing the accounts once in a year. Like business organizations, they are called not-for-profit organizations. In this chapter, we are going to see how a not-for-profit organization maintain accounts as like a commercial organization and prepares final accounts at the end of the accounting period. Few examples are charity hospitals, libraries or reading facilities, sports which offer entertainment and gives the physical fitness, and schools. They are, that is, institutions like educational schools. Now let us learn the meaning of not-for-profit organization. Organizations that are established for the purpose of rendering service to the public without any profit motive. Now we know a commercial organization or an organization which does business in public are aimed at making profit, but they are for not having any profit motive. They may be created for promoting art, culture, education, sports, etc. Examples: charitable institutions, educational institutions, cultural societies, sports, recreation clubs, hospitals, libraries and literacy associations. And what are the characteristics of such institutions? They function without any profit motive. Important. They aim to provide services to the specific group, that is the members, those who are member to that particular organization, or public at large. Anybody in the public can make use of its services. They do not undertake business or trading activities. They don't buy or sell any goods, but they do offer services. Their main source of income, then how do they survive in the environment? That is, their main source of income includes subscription from the members. Subscription, what is that? Amount collected from the members after specified intervals. That is subscription from the members, donations which are received from the members, grant in aid from the government, that is government gives money to support such type of organizations, and legacies. Legacies means a person who has no heirs, legal heirs. They may endow their property in favor of such type of organizations for promoting art, culture and education, sports, etc. Now let us see how the final accounts are prepared. Final accounts is the accounts prepared at the end of the accounting period to know the financial results of the organization and to know the financial position of the organizations. The final accounts, normally in the commercial organizations, we prepare trading account, profit and loss account and balance sheet. But here, since it is a different form of organization where there is no trading, that is buying and selling, or any activities carried out, so we prepare the final accounts, receipts and payments account, income and expenditure account and balance sheet to know the financial position. That is, receipt and payment account is nothing but receipt of all type of cash and spendings in the form of payments. Income and expenditure account, whatever the income received by the organization and whatever the expenditure done in the particular year to find out the surplus or deficient income. Balance sheet, as in the trading concern, it shows the financial position of the particular organization. So these are the accounts. Final account, it comprises the final accounts of the not-for-profit organizations. Not-for-profit organizations registered under Section 8 of the Indian Companies Act 2013. They are registered like public companies and private companies. They are registered under Companies Act under Section 8. Required to prepare income and expenditure account and balance sheet as per the Schedule 3 to the Indian Companies Act 2013. So it is mandatory, compulsory to prepare final accounts and submit it to the Register of Companies. Now, of the 3 accounts what you saw, first is receipt and payment account. What is receipt and payment account? It is a summary of cash and bank transactions of not-for-profit organizations prepared at the end of each financial year. So, at the end of financial year, you have to prepare the summary of cash and bank account details. That is like our trading organization, we prepare cash book. Same thing is told us, that is receipt and payment account. It's a real account in nature. Its type of account is real. All cash receipts and payments, whether capital or revenue. The receipts may be capital or revenue, and will be recorded irrespective of the period. They don't distinguish between previous year, current year or next year. Irrespective of the period for which the amount is received or paid will be recorded. So, all cash transactions, all cash payments are recorded irrespective of the nature of account or nature of the year which belongs to. Non-cash items which are not paid in cash, such as depreciation, outstanding expenses, accrued income are not shown in the receipt and payments account. So, what are the things are shown, what are the things are not shown to be distinguished. Now, how it looks like? It is given in the book. The detailed format is given in the textbook. So, it is shown here, the receipt and payment account like a cash book, like your cash book, 2-column cash book, that is cash and bank columns. Same way we prepare, receipts are recorded on the debit side of the receipt and payment account, and the payments are shown on the credit side of the receipt and payment account. Let us say what are the receipts are shown. Starting with balance brought down, that is opening balance at the beginning of the year is shown at the top, balance brought down, cash as well as bank, that is opening balance, and all receipts are recorded in different heads, that is revenue receipts and capital receipts are recorded on the debit side. And if the bank is having a overdraft, instead of having a credit balance, if it has a instead of having debit balance, if it has a credit balance, that is bank overdraft is shown on the credit side, and revenue receipts, revenue payments and cash payments are recorded on the credit side of the receipt and payment account, and the balance at the end of the year is arrived. The balance is shown at the bottom as balance carried down, that is your closing cash in hand, which will be shown in the balance sheet, as well as cash at the bank available. This also will be shown in the current assets of the balance sheet. You are given with sufficient examples in the book to prepare receipt and payment account. To prepare separately in the exam, you will be asked to prepare receipt and payment account separately to find out to find out the closing cash balance or bank balance. Items peculiar to not-for-profit organizations. These items are not common in case of a trading concern, because such type of items will be only occurring only in not-for-profit organizations. They are subscription first. Subscription means an amount collected from the member after every stipulated period for availing the service of the institute or the organization. So monthly subscription, sometimes half yearly, or sometimes annual subscription, or sometimes life subscription, annual membership fees. That such things are called a subscription. They form the revenue to the not-for-profit organization. Second is interest from investments. What is interest? We invest the amount received as donations or grant in aid from the government in a bank or invest in a financial securities which will fetch the organization sufficient interest. Such type of interest is a revenue income. Sale of old sports material. The members make use of the items available at a sports club. The damaged items such as bat, ball, net, things are sold off at the end of the accounting period. Such items form the revenue receipts to a sports institutions. Sale of old newspaper. In case of libraries, daily we purchase newspapers. Such papers get accumulated and disposed of at the end of the quite good amount of period, and such amount form the revenue receipts. Life membership fee. When you don't want to pay subscription after every short period, you need to become a member by paying a lump sum amount once and for all. Such type of fee is called a life membership fee, one-time fee. Legacy. Sometimes people, those who are very much offering their property to the service rendering not-for-profit organizations for their survival and future service to the community. Such people, they, by writing a will, they offer their property to the not-for-profit concern. They are called legacies. Admission fee for or entrance fee. Admission fee, at the beginning when you become a member, you have to fill a application and you have to pay a fee to get yourself registered in the not-for-profit organization. Such is called admission fee, or you can say entrance fee. At the time, only once it is collected from a member, that is called admission fee or entrance fee. Grant from government and other organizations. What is grant? Grant is nothing but amount sanctioned by the government for promoting art, culture and education and entertainment to the public. That is nothing but a social cost given by the government to promote such type of not-for-profit organizations. And sometimes companies, from their net profit every year, they spend some amount of the profit towards such type of social activities. Such things are called grants from government and business institutions. Honorarium. What is honorarium? When the institutions like literacy clubs, they call eminent persons from other or in the literacy or in dance or in sports to give lecture to the members, to give their experience to the members, to share their experience with the members. They organize a meeting. There they will be honored and they will be given with some money for their professional sharing, professional experience sharing. Such type of amount spent to the eminent persons is called honorarium. Donations, general parlance. Donations means we give donation for promoting art and dance, sports activities. Donations. Dana dharmam solluvom Tamil. Purchase of sports material. It's a capital investment in case of gymnastics. Gymnastics, we purchase a big equipments, or you can say preparing a auditorium. That is a capital expenditure. Purchase of sports material, bat, net, ball, everything. Purchase of sports equipment. This difference between material and equipment, you must understand. Materials represent things which get damaged or spoiled by the members' usage, and the equipments, they are repaired and reconditioned and it is retained for long period of time. That is equipment, such as your treadmill in a sports organization, you may have warming up session with a treadmill, or you can say bodybuilding organization, they have weighting lifts and other crowbar and extra parallel bar and everything. They are called equipments. Purchase of books for library, this is a capital investment expenditure, capital expenditure. They are invested with a view to use for longer period of time. These are all the things which are peculiar to a not for profit organizations. These are not normally come across in a trading concern. Now, since we saw various items, let us try to classify them. Revenue receipts, capital receipts. What are revenue or capital receipts? Sometimes as per the usage, sometimes they may change the category. Revenue receipts are subscriptions, interest on investments, interest on fixed deposits, sale of old sports material, sale of old newspaper, collections or receipts relating to the tournament fund, that is conducting some tournaments, that is district level or inter club tournaments, tournament prize fund, sports fund, matches, entertainments, dinner, etc. Capital receipts, life membership fee only one time received, legacies received from the donors, specific donations, sometimes donations received to meet particular sports. In a sports organization, somebody may donate money to promote particular sports, specific donations, sale of fixed assets, special funds which are meant for particular purposes. They are called capital receipts, which changes according to the usage. They are admission fee, though it is collected only once, but it is taken as some places it is revenue. Donations, special fees, grant from government and other organizations. They are sometimes capital, treated as capital, sometimes as revenue. Capital expenditures mainly used for purchasing sports equipment, purchase of books for library. Revenue expenditure which are done in a day-to-day business, honorarium paid to the eminent persons, those who are coming, charities, audit fees, purchase of sports material, printing and stationery, postage and courier charges, expenses relating to tournaments, sports, matches, entertainment, dinner. These are all revenue expenditures. Now, next is your income and expenditure account. It's a very important account, like our profit and loss account, trading profit and loss account, what has come and what is gone, and the balance is treated as net profit in case of a trading concern. That is, from the gross profit, after meeting the non-operating expenses, taking into consideration of non-operating incomes, the remaining portion of the gross profit is termed as net profit. In other case, it is treated as, if the expenditure are more, it will be treated as net loss. Likewise, in this not-for-profit organization, income and expenditure account is prepared. The income and expenditure for the particular accounting year, by taking the items which are pertaining to the particular year are taken into account and found out surplus or deficient at the end of the period. Income and expenditure account is a summary of income and expenditure of a not-for-profit organizations, prepared at the end of the accounting period. Like receipt and payment account, it is also prepared at the end of the accounting period. It is prepared to find out surplus or deficient. We don't say net profit or loss, we say it surplus or deficient pertaining to a particular year, whether we have more money or income is more than expenditure or expenditure more than income, that's all. It is a nominal account in nature, nominal account, where we debit the expenses and losses and credit the income and profits. It is just like preparing profit and loss account can be prepared from a given receipt and payment account. With a given receipt and payment account, we will prepare income and expenditure account. Let us see the format. This is a format which is given in the textbook. Expenditures are debited and incomes are credited. At the end of the year, we do like a profit and loss account balancing. If the balancing figure, income is more than the expenditure, you will get balancing figure here, which is termed as surplus. If the expenditure is more than income, the balancing figure comes as loss. I can say it is deficient. This is a format of it, with which the surplus is added to the, like our trading concern, the profit is added with the capital fund in the balance sheet. Same way, the surplus is added to the capital fund of the balance sheet. And now we learnt about receipt and payment account and income and expenditure account. Let us see the difference between these two, receipt and payment account and income and expenditure account. Purpose, for what purpose it is prepared? It is to know the cash receipts and cash payments, that is receipt and payment account. It is to find out whether there is a surplus or deficit, whether you have surplus or deficit. Nature of account, it's a real account, it's a nominal account which shows the income and expenditure. Basis of accounting, it is cash based, only cash transactions are recorded, non-cash are not recorded. It is based on accrual basis. Accrual basis, that is non-cash items. Non-cash items like outstanding expenses, depreciation are also recorded. Accrual basis, we have to consider whether it is prepaid or received in advance. Such types of adjustments are made. Then we do prepare income and expenditure account. Opening balances. In case of receipt and payment, we open with the opening balance of the cash and bank balance to arrive at the closing cash or bank balance. There is no opening balance, only income and expenditure of particular accounting year is considered to arrive at the surplus or deficit. Nature of items, all actual receipts and payments irrespective of revenue or capital items are recorded. Only revenue items. Here capital as well as revenue are taken into account, but here only revenue items are treated. Period for full accounting 1 year, that is previous year's receipts or next year's receipts, both are considered, but here only for the particular accounting year, the income or expenditure of the particular accounting year are compared to arrive at surplus or deficit. And to how they adjust in the income and expenditure, subscription is shown as an income. How to arrive at the subscription for received for the particular accounting year, that is subscriptions received less the subscription for previous year. Previous year subscriptions are to be deducted. Subscriptions for the subsequent year, next year. Now let us say if it is 2020, if it is received for previous year, that is 2019, that is 2019, it is to be deducted. If it belongs to 2021, they are all supposed to be deducted. Add the outstanding subscription for current year. Current year subscription outstanding are to be added. Then received in advance during the previous year for the current year, that is amount paid as advance. Amount subscription paid in advance of previous year for 2020 are to be added to arrive at the total subscription for that particular year. Such way we have to consider the accrual basis of accounting, that is taking into account of subscription belongs to previous year are to be deducted, subscription for the subsequent year are to be deducted, and outstanding subscription for the current year are to be added, and received in advance of previous year for the current year are to be added. So such way you have to make an adjustment to arrive at the current year figure. So now we come to the end of the chapter. So what you saw today is the final accounts of the not-for-profit organizations, under which the meaning, features, various accounts prepared under final accounts of a not-for-profit organizations such as receipt and payment account, income and expenditure account and balance sheet are prepared for a not-for-profit organizations. So now looking at doing the exercise given in the book, solved exercise, you may do the exam, that is exercise part given in the book. Corresponding numbers are matched so that you can do the accounts very easily. Thank you very much, children. Thank you.